How's it going, everybody? Brian Hoops here, Midwest Market Solutions. This is our closing market TV commentary. It is Monday night, November the 27th. Thanks for joining us here. This is a chart of July soybeans. Doing a little bit different look tonight at the beans. We had a move higher up into this 1030, 1033 resistance. You can see right in this area, we've got a lot of resistance. This is the highs from October, the high from November. And 1033 could stop us as we try to go through the rest of this winter and into the spring time frame. You go all the way back here to July when supposedly we're having all of our weather premium put into the markets. Best we were able to do is 1050 to 1057 and 3/4 as a high. So we're within 25 cents of this high that we had back last summer, and you go all the way back to this low that was charted. This is 935. You go here to August, that's 952. So that represents at least 70 cents and almost a dollar at at 1033. That's nearly a dollar off of our lows. If you're not making sales in this area on a dollar rally off of our lows, 75 cents off of our August lows, I think you have to be doing something here at this point in time as far as minimizing your risk, because let's look at a corn chart here of July corn. We're going nowhere. We are down here near contract lows. There's just no marking opportunities since really August going forward in here. It's the soybeans that have rallied, put in some premium. If you're going to be making some sales, it looks like this is the one that's doing it. You want, if your goal is to sell in the upper 25%, upper 35% of the range, you're up there right now. Unless we go out, make new highs and go above 1060 into $11 mark, that's a possibility. But I think the only way that happens is if you have adverse weather in South America through the winter months. There's, I think, some better alternatives. Turn this into some cash, use that cash, pay down some debt, especially if you're going to store corn. You're not storing two crops that way. You're storing just one crop at this point. Inspections were a little bit of a disappointment. Beans at 58, corn at 25, wheat at 12.7, and other news, we flip to the corn here. We're near contract lows. I think we're coming down here in this December contract. We're coming down. We're going to test these lows into first notice day, which is Thursday. You can see if we go to the wheat contracts, we made new lows, and I think that's where corn's probably headed. See if we want to test these lows, see how big the deliveries are as we get into the first notice day. News-wise, not much for corn. No private export sale announcements this morning. Egypt is tendering for wheat this afternoon. Crop condition ratings out this afternoon. Virtually corn and soybean harvest virtually complete, 100% complete, so we're not going to talk about those really any longer. But if we look at good to excellent ratings in the wheat, they're down 2%. Good to excellent to 50% good to excellent versus 58 a year ago. And you would think that should give you some strength in these new crop wheat contracts. Well, we went to contract lows today. We are up 2.5 in the July contract here in the overnight trade. Let's continue our look at cattle. We had a good rally in live cattle, highest levels here in the February since before Thanksgiving, the 15th and 16th. Feeder cattle, even more impressive. We had strong movement there. Let's look at the March contract. All the way back up here into this resistance. We had thought we're going to see some sort of a retracement rally in these cattle. Let's throw some retracements out here. Here we look at this retracement. We completed the 38% today. I got a feeling we're going to go do this 50% retracement, maybe the 62, but somewhere up in here is this our next retracement rally before we take another leg lower. All right, hope that helps you out. Have a great night. Good luck, good trading, everyone. Brian Hoops from Midwest Market Solutions. Contact us if you have any questions.